What is going on, everybody? It's Stas here. Welcome back to another video. So the stock market was red today. S&P 500 down 0.4%, Dow Jones down 0.2%, Nasdaq 100 down 0.6%, and somehow the Russell 2000 went up over 2% on the day. And today we're going to be talking more about the markets, breaking down some technicals, going over the top stocks to buy now. And I also want to share with you guys what I did in the stock market today and in general where my head is at as a trader and as an investor. So if you guys find value, hit the like button, subscribe to the channel, join the Strive Smart Discord chat and the Facebook group. Get yourself 4 stocks from WeBull and $30 from M1 Finance. All of those are free and linked right down below in the description box. So let's take a look. Again, guys, the markets were red today despite the small cap index, the Russell 2000. The major markets were red. And the more I look at this 4-hour chart here on the S&P 500, the more I think that the S&P wants to pull down close to that 3,700 level. And if we did do that, if we went to 3,700, where would that be putting the S&P? That would be putting it right at the support of this channel for it to test potentially a higher low right around 3,700 and maybe continue the uptrend that we've been in for really a long time at this point, right, guys, based on this chart. So looking at this movement again, we could see a dump off. And take a look at what happened at the close of the market today. And it was really more the second half of the market today. We took a big dump from 38.20 down to about 37.95. That was a sell-off of 0.6, 0.7%. And the way it looks, guys, it looks like we want to go down for the S&P 500, that is, go down and test 37.80. That is where we found support a couple days ago. You guys can see it here on the 12th of January, on the 8th of January, on the 11th of January. So needless to say, if we get down to 37.90, we break that. We test 37.80 tomorrow. We break that as well, or maybe at some point next week, we might be going lower. That brings me back to my point on the 4-hour chart. If we look at the bigger picture, that is where we probably will start dumping into the mid 3700s, 3745, 3750, and if that breaks right around this 50 SMA 4-hour chart, that is where we could be going to that 3700 level that I just mentioned. So watch out for all of those key points when it comes to the S&P 500. And when we're looking at the Nasdaq 100, guys, one thing to keep an eye out on is this 50 SMA, right, on this 4-hour chart. We've been holding this religiously, and I think the second it breaks that, if it does, that is where we'll probably fill the gap, maybe down to the mid 12,000s, maybe 12.3, maybe 12.4. And on the hourly chart, you guys can see we pulled down today, same as the S&P and the Nasdaq, and we are maintaining the uptrend as of now. We actually closed above 12,900, right around that point, which was a resistance from the end of December. So I think if 12,900 can hold, maybe we rally off of that point. But overall, if that doesn't hold, I could see Nasdaq 100 going 12,800. And if that breaks, we could see an even further sell-off on this 4-hour chart. Maybe again down to that mid 12,000 level. So we'll see. At this point in time, guys, we are seeing a bit of a pull down, but that is what happens when the markets get overbought. Not saying we are overbought, but that is what happens when we see a lot of green. Let's put it that way. Healthy pull downs are always really accepted in my world. I love them, guys. Although some people out there, especially if you just started trading this year in 2020 last year, or this year in 2021, you might think, oh, the markets go up and up and up. That's it. That's not true. The markets need to pull down, and this could be the start of that pull down. So let me know, what do you guys think on the markets? Drop a comment down below. I would love to know any input, any insights that you have. And now let's talk about what I personally did today. And honestly, guys, I locked in some profits today. And this was not yesterday when I made this trade. I did not think it was going to go up this quick. And I wasn't able to build out my position like I originally wanted to, and that was in Virgin Galactic. If you guys remember and you saw my individual stock analysis video on Virgin Galactic yesterday, I bought 100 shares yesterday, and $3,000 roughly is what that 100 shares got me. That is not, let's just say that's not really big at all when it comes to my portfolio, right? I'm not trying to be a somebody that's not humble, a D-bag, if you guys know what I'm saying, but I'm just being honest, right? And I wanted to build this out, maybe 300, 400 shares, but I wasn't able to build it out, and I just locked in the small profit that I had, right? I had, well, it was a pretty nice profit. It was about $400, right? I got in 100 shares at $27.34, and then I ended up selling out today, and you could argue it was a bit early, but I sold out earlier in the day, in the beginning of the day, at $31.25, and it was roughly $400, maybe a little bit less, like $390. But that is what I ended up doing there. And again, guys, I mean, I wish I could have built this to a bigger position, but it just got very big. It got very big a little too quickly. Now I'm going to see if it pulls down a bit. Maybe I can add a new position in and maybe build that out. But at this point, I just wanted to lock in my profits there. And I also ended up getting into NNDM. And this was earlier in the day. I believe it was like 11 a.m. or something like that on the East Coast, that is. And this is actually one that I almost sold out of here in the aftermarket session. I got in originally right here at 10:36 is where I got in. We pulled down from there. I held through some pain. Overall, it didn't break my 2% stop loss. It actually only went down about 1% from where I got in, so I held through that. And then I really rode it for the rest of the day, and I actually didn't close my position at the close of the market. I figured I'm going to let it run. And then I saw this massive run after hours, and I actually still have the order live in my brokerage, but I was watching it, and I put a sell order at 1073. It did not fill. It actually hit 1072 literally right here, and then it dumped off to 1053, and now it's at 1064. So we'll see, guys. Maybe I get filled during this video, but yeah, I'm still in NNDM as of now. 1073 is my sell order. Who knows if that goes through? And they actually got another direct offering. They're doing another direct offering, 35 million ADSs at $9.50. And you guys know, I've mentioned this before, it seems like every time they do an offering, the stock drops. Hence, today it dropped to $9.50, and it rallies right off that point. And it did that yet again today, and maybe it was a blessing in disguise that I didn't get filled, because, hey, who knows, maybe we go even higher tomorrow, and I might just cancel that order. Honestly, this could just be a sign from above, right? Who knows? Maybe. We'll see. But NNDM, guys, I'm still in that one. Apple, I'm in at $130. Jeez, my throat's clogging up. $130 is what I'm in when it comes to Apple. Still holding on to this despite tech not doing so well today. Amazon, I'm also in this one at $31.50. I could have locked a small profit yesterday. I didn't. I'm still holding on to my shares, guys, at $31.50. Workhorse is also one that I'm still in at $22. I like the way it's holding this 24 level support. We popped up. Now we can see if 25 breaks. If that does break, we might be seeing another big move in Workhorse close to $28. So I'm holding on to Workhorse for that. And SLV, I'm in for the silver exposure. This one up 1.1% today. I'm personally in SLV at about $23. So overall, guys, that is what I'm doing. And honestly, with SLV, I see a lot more upside. You guys can see it pull down, shook some weak hands. We're holding the uptrend based on this 4-hour chart, and now we could be gunning for $23, $24 plus. So that is what I did. Those are some thoughts on the market. Let me know in the comments down below what you guys are doing, your thoughts on the market, and if you guys are enjoying the video, make sure to hit that like button. Let's try to get 400 likes on this video. I challenge you guys, 400 likes. And also, if you haven't, what are you waiting for? Subscribe to the channel, guys. Come on, subscribe to the channel. And now let's talk about a bunch of stocks here that I'm looking to buy right now. And number one is NEO. And I don't want to say we called it out because we were a little wrong in our, well, not really, honestly, because on Monday, I thought we might see a big pop after Neo Day, which we did. And I also mentioned, what was this, on Saturday or something, or maybe Friday, I mentioned after Neo Day, and what we noticed with a lot of these, Tesla days, Neo days, and all these events, a lot of the time, not always, but a lot of the time, the stock ends up selling off after the event. So we got that initial pump on Friday, it ran the previous week, and then on Monday, we got a nice pump as well, and ever since then, we've been cooling off. We've been selling off, and we're kind of, you guys can see it, in this wedge where we're making lower highs and we're making higher lows at the same time, and we're holding that 60 level, right? You guys can clearly see it, and I think one of two things is going to happen here, right? I think we're either going to hold 61 and squeeze out of this and not even get a further sell-off, and we might squeeze out of 62 and maybe go back to $67. I could easily see that happen maybe next week or the week after some consolidation. Or if we break 60, which honestly I prefer that to happen because I'd pick up more shares at this price point. I think if we break 60, 55, 56 could be the price point that we get to, which I think would be very healthy, right around this 50 SMA on the 4-hour chart. I think that could be a great entry point, and that is where I'd probably pick up some shares. And even on the momentum on the upside, if we were to break out of 61, maybe 62, that could be another good play. But I just personally rather have the shares cheaper, and I'm sure you guys could agree with that. So watch out for Neo. It's I don't want to say the hype is dying down because that's not true, but it's cooling off a bit, which could open up an opportunity for those that are patient. And Intel, we should have covered this yesterday, but Intel is getting a new CEO. I forget his name, but a new CEO is coming into Intel, which has been a struggling company, and you can clearly see that based on the stock's performance. If a stock is going down, that doesn't mean that the business is crushing it, right? That's not how it works. If a stock's going down over a year, 2 years, whatever, that means the business is facing some headwinds, and that's what we're seeing. We've been seeing with Intel, and with the new CEO, that is like a fresh page being turned. And on top of that, many firms actually upgraded Intel. I mean, take a look here on the live news. I can show you guys. We got some buy ratings. You can see here BMO Capital upgrades Intel to outperform, adjust price target to $70 from $50. We can see here Atlantic Equities upgrades Intel to neutral from underweight. They adjusted their price target to $55 from $36. Is this Citigroup here? Let me double check that. No, it's not Citigroup. Cowen and Co. upgrades Intel, raises their price target to $75. So you guys get it. A lot of upgrades, new CEO, and based on the technicals, I mean, you got to be honest, it's looking pretty bullish. I mean, let me extend this to the right. You can see that with this pop above $49.50, Intel was able to break the downwards channel, and we also broke $53, which was also a resistance within the downwards channel, stemming back from the beginning of September and back from the beginning of December. And we filled the gap on top of that from $53 to $56, and that's kind of where we are right now. And I personally wouldn't force it here. We are overbought, but if we end up consolidating anywhere from $55, $56, I think that could be a nice, maybe a nice pickup here for Intel. We will see. And the reason why I'm a bit more cautious is because it has run so much in the past couple of trading days. That always raises not red flags for me, but I don't want to FOMO into it, right? Let's just put it that way. But either way, it is worth watching on this upside. And Zoom is also one worth watching, ticker symbol ZM. This is one that a lot of people have mixed feelings on, right? A lot of people are like, oh, Zoom is just a pandemic play. Nobody's going to be using Zoom. It was overvalued. I mean, you could argue, yeah, it was overvalued at $600, but since then, the valuation has come down a lot. From $600 roughly, it's got down to about $330. That trimmed, I mean, gosh, guys, that was like 40-45%. So it trimmed a massive amount of its value. And now the question is, are people still going to use Zoom after this crisis, the CV is over, after everybody, goes back to quote unquote normal, right? Whatever that new normal is going to be. Are people still going to be using Zoom? I think they are. I mean, I think Zoom unlocked a different way of doing work. People realize that they don't have to fly to across the country for a business meeting, or they don't have to drive an hour to meet up with this person to get a cup of coffee and discuss this or do that or do this. You guys get the point, right? They don't have to do that. They can just simply set up a studio like this or anywhere. And me personally, guys, my studio's in the closet. You could have an office. You could do whatever, right? My office is in this closet I have, which is kind of funny. And, you could just go on Zoom and talk to your people through Zoom. And I think people are still going to do that. And, I mean, you've seen, although we don't copy other people's buys, I mean, if you guys get those daily email updates from ARK Invest has been buying Zoom. So that is interesting, and I tend to agree with that buy. I mean, I think, again, there is upside here for Zoom, despite it, quote-unquote being done now that the, crisis is slowly coming to an end these next couple of months, hopefully, right, guys? But, yeah, what are your thoughts on this? And overall, the technicals are showing that we held 350. That was a support from back in the beginning of September. We broke 50 SMA. We broke 375, also a big resistance. And now we're about to test the 180 SMA here on the 4-hour chart, which is the ultimate test, which, again, we're still in a downtrend at this point, guys. But if this 180 SMA, this downtrend's able to break, I can see this. Honestly, Zoom, the next price target would be for me around $415. Let me extend this to the right. You guys can see right around 415. That was a resistance back in the middle of September. That is where I think Zoom could be headed. So overall, I'm not a ultra bear on Zoom. In fact, I think there is a little upside left. I think people are still going to use Zoom. And the tech is solid, guys. The tech is solid, and they have a lot of customers. So I like Zoom. I personally do. Visa is another one. Visa is down $20 from its peak, down almost 10%. And if we open up this hourly chart, or not the hourly chart, the yearly chart, you guys can see even more insight on Visa as this could be a dip buy. I mean, take a look. Let me pull out this handy-dandy circle tool. Right around where we are now is this 180 SMA on the yearly chart. This is actually where we held the uptrend in the previous pull down back in the end of October back in 2020. We held that like clockwork at 180 and we rallied back up to 220. And overall, we could argue that this is an ascending triangle. We see resistance at 220. We're uptrending into that resistance. And we might squeeze from 200 back to 220, maybe even over 220 if the ascending triangle plays out. So I think Visa is worth watching on this dip, no doubt about it. Watch out for that at $200. This is very attractive. Coca-Cola is another one, guys. Ticker symbol KO, which is similar to Visa. On this yearly chart, we are holding the uptrend right around this 180 SMA, and you guys can see that's around $49 to $50. And as long as that can hold, I think we are potentially able to rally back up. And I think if we look on this hourly chart, you guys can clearly see we are still downtrending on the hourly chart, so be careful. So I think we need to break this downtrend on this chart and probably get over 50 and probably over 51. And if that happens, guys, that would be the confirmation, in my opinion, for Coca-Cola that it's continuing the uptrend. And that could be an awesome opportunity to go long, as it could fill the gap from 50, 51, maybe back up to $55. So that's Coca-Cola. Ride is another one. This is Lordstown Motor, and we actually covered this one a couple of videos ago. You guys remember that? We talked about this level of resistance based on this 4-hour chart. It was kind of in this wedge. You guys can see it hit a resistance at 32 back in September. It hit a lower high at about 30 back in November. And this, where it rallied up to that day that it went up 30%, that is where the next lower high could have been. And now that we see a couple days have passed, it's proven that it is the next lower high, as we are struggling there and starting to curl back down, selling off. So I think Ride could maybe get down I'd say around $23, $24, maybe right around this 50 SMA, 180 SMA, and I think that could be a nice dip buy for a potential squeeze out of this downwards wedge. And if we do ultimately break that, I think Lordstown could be going $30 plus, probably around $31 to $32. So I'm watching Lordstown. CIIC is another one. We actually talked about this one on Instagram earlier. If you guys don't follow me there, make sure to follow me there at StasserFest. Same with Twitter at StasserFest for daily updates, callouts, and just to keep up with me on a day-to-day basis. So watch CIIC. This is one that is breaking this wedge that we see on the 4-hour chart. It's making higher lows at the same time as it is making those lower highs. And it went up 10% today, up almost $3, closed over $29. And in fact, it was up almost to $31 pre-market. So if this doesn't look like bullish momentum starting to kick in, I don't know what else does, guys, because this for sure, to me, looks like we are breaking out. So CIC could be going mid-30s. That's where I think we could be going. And I almost took a position on this one today, but I'm going to wait until tomorrow, and I might take a position. That is the truth. I might take a position. And the next one here is Tattooed Chef, guys, TTCF. And this is one that, if you guys didn't catch, I made an individual stock video on Tattooed Chef earlier today. I'll link it down below in the description box, and I'll pin it at the end of the video if you guys stick till the end. And this is one that I did some research into, and I've done research before, and I'm liking this one, guys. I still have to try their product, and maybe after I do that, I might take a position in it. And when it comes to their technicals, $27, $28 is a sticking point. We talked about that earlier today. This one got rejected back in September, back in October at $27, back in the end of December. So it seems like we're forming this cut pattern, and we want to maybe test the breakout. And I think if we break out of that 28 level, $30 plus is where Tattooed Chef could be going. And I'm just liking it, guys. I'm liking it. This is looking very bullish. And again, if you guys want to check out a more in-depth video on Tattooed Chef, I'll link it down below. And let me know in the comments, guys, if you like those individual stock videos. I know a lot of you guys do. If you like those, let me know in the comments. And also, let me know any other stocks that you would like me to do an individual stock video on. So that's Tattooed Chef. Another one here is IPOE, yet again another SPAC that is taking SoFi public. This is one that I'm being a bit hesitant with. I'm watching it, and over this whole week, it's been showing some pretty nice signs of consolidation. 1 day, 2 days, 3 days, and today marks 4 days of consolidation. And what that's telling me is it's kind of like the calm before the storm. What direction is SoFi going to pick here? Is it going to break out of 1950? I think if that happens, into the $20 level, if it breaks this overall consolidation range to the upside, that is where we might be seeing a big pop back to $22, maybe even above that, which could give it around 10-15% profit potential from where it is right now. And of course, it's risky. This could also go the other direction. If it breaks $18.50, $18 on the downside, maybe we go down to the mid-16s. That could also be a point where it gets to. And CCIV, guys, this is Churchill Capital Corp, which is taking Lucid Motors public. This is another heavily requested stock. This has gone, well, it's a SPAC. It's gone from the beginning of this year, literally a couple days ago, a week ago, it's gone from $10 to $20. Now it pulled down to $17. And it seems like overall, it is holding this not the 180 SMA, this EMA on this 4-hour chart. It seems like it is holding the uptrend it wants to. And this, technically speaking, could be a dip buy to pop higher. And what's the hype about, right? What's the hype about? Well, Lucid Motors is yet again another EV player, and they actually play to the high-end EV market, and that's pretty interesting. And the truth is, their vehicles are quite expensive. They have cars ranging from $69,900 to $161,000, and many of their cars are going to start delivering. They have the Lucid Air, multiple versions of that. That's going to start delivering in 2021, other versions in 2022, and they actually cost a good amount of money to reserve. It actually costs $300 to reserve one of these vehicles, the cheaper model, up to $7,500 to reserve the one that's $161,000. So Lucid Motors is interesting, and admittedly, I have to do more research on it, and I'm going to do that. But overall, it seems pretty nice. The momentum is there. This could be a dip buy. And the last one today is going to be Fastly, guys. And on Fastly, we see this overall head and shoulder. We've talked about that before. Left shoulder, the head, the right shoulder right here. And honestly, the way it's looking is this wants to break out. I mean, it's already breaking out. It broke out of $88. It looks like this wants to fill the gap up to about $98, $99, maybe $100. Meaning, from where it is right now, Fastly could have another 8 to 10% upside. I mean, just because we see a head and shoulder forming doesn't mean we can't play the mini patterns within the head and shoulder, right? And the way I'm thinking is, again, it's going to go from $91 potentially, maybe to $100, and then $100 is where it's going to test that resistance again for the right shoulder. If it doesn't break 100, 105, maybe we go lower. And honestly, if we break 100, 105, I think Fastly might be able to get to that neckline at about 120, maybe 115. So overall, Fastly is looking solid. I like the way it's broken out of this downtrend. It's slowly reversing. And do I see a head and shoulder, an inverse head and shoulder there? I might see one there, guys. Let me take a look here on the hourly. Yeah, you guys can kind of see it. Left shoulder here, head here, right shoulder. So this could easily fill up to $100 in my opinion. And that's pretty much it. Hope you all enjoyed the video. If you did, hit that like button, subscribe to the channel. Make sure to check out all of the free links down below, the Discord chat, the Facebook group, your 4 stocks from WeBull, and your $30 from M1 Finance. All of those, again, are free and linked down below. And make sure to check out that Tattooed Chef video. I guarantee you guys will find value. I will link that down below in the description as well. Or you can click up here, right or left. Just click that, and you can watch the video. And again, you'll find value there. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Keep crushing the markets. Peace out.